Welcome back to Doing Divorce Different. I'm so happy that you're here today. And I think the conversation today is going to give you lots of information about whether you can keep your home when you're going through a divorce. We're going to talk about all divorce things. I have my friend, Brett Leschinsky. I can't believe I can actually just say your name with ease now.
It's a hard one to get past, but it's not too bad.
It's not
We
too
get it.
bad.
You get it, you get it.
Yeah, but he's one of the best divorce mortgage specialists that I work with. And Brett, honestly, you're so when I send my clients to you, you respond immediately and you're so helpful. And that's so important when we're going through something really scary like divorce. And whether you can keep the home is often one of the top things. I say that your kids what you're gonna do with your kids is really important and your finances, and your home's kind of in there because you're worried about you wanna keep it for your kids and can you afford it? So, I think this is so timely because things are always changing, and so we're gonna get in deep, but Brett, can you just share, what made you do this work? You're a mortgage guy that helps divorce people. What got you?
Yeah, I don't know, I got into this maybe 15 years ago. I've been a loan officer for about 24 years, and I just kinda fell into the divorce niche, um, and I had a past client who went through a divorce and gave them some advice when they called me and said they had to remove a name from a loan, and I thought that was true. For the other person to go by, they had to remove a name. That wasn't true. The divorce decree can indemnify them and they can buy a house even without their name being off the old loan. So I gave them bad advice. And when I found that out, I was bothered by that. Then I just started digging into what else during a divorce was different. And then I just kind of got obsessed with understanding it. I had been through a divorce myself prior to that. So that being divorced isn't what got me into it, but it kind of made me when you go through a divorce, you wanna help other people
Mhm.
who are going through divorce. That's just kinda how it so I that's what kinda pushed me into it, and I've just, really had I get a lot of, um, positivity from helping people through this
Yeah.
time in their life because I know how bad it can be, so.
I love that, and, that's those are the best people. Those are most of the people that I have on the podcast and I work with, and for me, I think because I've been through something hard, I wanna help you through something hard. I haven't been through divorce, but I've got the knowledge, from law school, and so in your situation, you've been through it, now you wanna help people, so I love that, and it's probably why you're so good at it because it's your calling. That's what I say, my work is my calling. I was telling Brett before I got on that my husband's retired, and it's weird to be working, but this is my passion and my calling, and I'm not ready to stop yet, so anyhow, that's a long introduction. Welcome, Brett. Let's start digging in to because, like I said, so many of my clients really want to keep their house, like for their kids' sake. And I've had guests on the podcast who have said, be realistic because if you can't afford it, you're not helping your kids. If you're all stressed out, working all the time, trying just keep the house to keep them, and they can't do extra sports that they used to do or whatever it is, you really need to put a lot of thought into this. And I feel like clients or people going through divorce need to have all the information. And I wish I could work with everyone because I do feel like if you work with me, we really talk about it. Like we don't just say, "Oh yeah, I'm taking over this." We go, "Can you? Can you afford it? Can we look at it?" That's when they're going to call you to kind of get an idea of what this is going to look like in the future. But Brett, so many people going through divorce might even find out that they can assume the mortgage at a good rate, or they think they can. But then they file for divorce, they go through it, they think it's debt, and then the loan officer says, "Oh, no, you can't." Things change. And so you just have to be so careful, I find, and you have to make sure you have all the information. So tell me what's going on in real estate now? I don't have you're going to help me find a cabin. I know that.
Yeah, yeah, that's right. Yeah. Um, so I like that you said that, people have, you had somebody else on that said, don't, people should be weary of trying to keep the house and not being able to let go of um the house specifically because there's so much, memories and emotion tied into a house and the kids. Um and but honestly, I see a lot of scenarios where people do it the opposite way, where that's advice that I would add to that. I think that's
Mhm.
good advice, is to watch being too emotional about your financial decision and getting it over your head. But there's also a yang to that yin, is when people are, I see a lot of people who just kind of automatically feel like, or maybe their attorney tells them, "Yeah, you got to sell the house." It's just kind of what you do. It's just it feels like a default to sell the house when you go through a
Mhm.
divorce sometimes, and sometimes you get that advice from friends or even a professional. Um, but a lot of times I see where it's the opposite, where that if somebody can keep the house and it makes financial sense to not uproot everything and keep that house. One of them keep the house. There's usually one that it makes sense, most sense for. But um, so you kind of got to balance both, right?
Mhm.
Don't be too emotional about it, but then also don't be too financial about it, and don't be too kind of uh, just don't.
Afraid maybe?
What's that?
Afraid that you are thinking that you can't keep it?
Yeah, yeah, yeah. That's a good way to put it. Yes, afraid. You know, it's just been the higher rates that we've had since 2002, basically in January 1st, almost 2022, rates started going up from about three and a quarter to by November of 2022. So in just 7 months, or sorry, in just 11 months, it rates went from three and a quarter to seven. So that, and they've just hovered up there between the 6 and an 8 range
Mhm.
for the last 4 years, and that has just really changed the dynamics of divorce, because the house used to be kind of the backseat item, right? If you had to lose your 3% rate for a 3 and a quarter rate or a 3.5 rate, it just didn't move the needle enough to try and stress about how do I remove a name or anything. You just refinanced and removed the name and took out cash to pay the marital settlement at the same time. It was just easy.
Yeah, it
But this
was.
this difference has really caused the house and the mortgage and the living arrangement piece of the divorce to kind of come to the front of the discussion topics, right? And so I it's been tougher, and there's that navigation. So yeah, it lends itself to, okay, well, how do I keep my rate? Can I do a name delete assumption and remove the name of my spouse's name without losing my rate? Okay, yeah, you can do that, but how do you get the equity out of the house to pay a marital settlement? Assuming you need to. Not all divorces, of course, have that, but that's the most common scenario. So, you can either um, take out a second mortgage, but it depends on I mean, I've had people who are trying to bend over backwards to keep their three and a quarter rate on $80,000, and they have to pay out a $200,000 marital settlement. So they're going to run out and get a $200,000 second mortgage, which is at a higher interest rate than any first mortgage, because they're in second lien position. So now you've got an 8% rate on a $200,000 loan amount just to preserve a three and a quarter rate on $80,000. Doesn't
Mhm.
make sense. So, you just have to look at it, and each scenario is different.
That's what I was just gonna say. I think what you're kind of showing is that every situation is different. And I know sometimes you can assume the mortgage and sometimes you can't. Am I
Right.
wrong there? Right? I
Yeah,
mean,
no, you're right.
yeah.
So, this is just a quick rundown of the assumptions is your current servicer is the one that you would go to for an assumption, to contact them and figure out if they allow for assumptions, because not all of them do. I mean, back before 2022, the only one servicers that were allowing assumptions were the big banks, the Wells Fargo's, US banks, Chase's, whatever. And since 2022, a lot of the larger servicers, credit unions, and other smaller banks have jumped on, probably because they had the scenarios in front of them and they had to have a board meeting and say, should we allow these? Because it doesn't
Right.
come up enough. And so some of them said yes, and some of them said no. Some of them want to keep. The only reason to do a name delete assumption is because the servicer wants to keep the servicing, right? So if but there's hoops to jump through for that. And when you do a name delete assumption, so not all servicers allow them, first of all. So you just have to call your servicer and see if they do. If they do, they're not going to add a name. So if the spouse keeping the house, they have to go through an underwriting process and they have to see if they qualify for the current monthly payment on their own without their soon to be ex or ex spouse's income, the way they both qualified for it originally. Right.
Well, and I've gotta say, Brett, I've heard tell of people who have gone through this process and were told that they could do the assumption,
Mhm.
and then because the situation changed after the divorce and the income that person was receiving changed, they said, "Oh, no, we're not gonna do this for you." So, you have to make sure that you are looking at your future finances, correct?
Absolutely.
Yeah,
One of the things that kind of frustrates me actually, because you call a servicer and I'd say 90% of the clients I tell, I just try and help, because I don't do name delete assumptions. I can't. I'm not their servicer, right? I'm an originator. I originate. If they need to refinance, that's where I can help them. Or if they're exiting the house and they want to go buy a new house, that's where I can help them on the timing. Can they buy a house before the divorce is finalized? That's a big one that I get. Timing is a big deal, and that's what I can help with. But on the name delete assumption for somebody keeping the house and wanting to keep their low rate, I just tell them, go call your servicer and see if they do it, first of all. And if they do, you're right. You're right to bring this up, because I bring this up to attorneys all the time. It's not just, oh, go do a name delete assumption, because there's a lot of parameters a lot of assumptions that you're assuming in there that they can do an assumption that shouldn't be. So what's so the servicer is always going to tell them, call us when the divorce is final. It seems like they don't even want to discuss your situation to help you navigate through it and see if you can do it, because you need to know if you can do it or not when you're in it with mediators or the attorneys and trying to figure out the path here. And if they're not going to tell you what the path is, or whether or not you can do this, how how do you finalize a divorce?
right,
It's a chicken or the egg, and it's so frustrating um, that servicers don't, give some time to help them through this. And so I end up trying to help them through it, to just help them get through the yes I can, or I probably can't,
yeah,
kind of thing, and so that at least they can get through their divorce. But yes, you're right. I mean, obviously, you have to use your post decree income, your post decree debts too. I mean, if I pull their credit, 3 of the 5 debts might be being charged to their ex, so they're not
right,
really going to be their debts after. In the divorce decree, even though they're still on the credit report, all 5 of those debts, I can ignore the 3 that that the divorce decree said aren't going to be theirs, that their ex spouses spouse has to pay, right? So, um, knowing what the post decree situation looks like for debts and income is a big deal. But then it goes further than that, because the servicers on a name delete assumption can use whatever debt to income ratio they choose. Fannie and Freddie typically use 50% debt ratio as the cap. Well, I've seen credit unions who use 36%.
Wow.
So if you think you can qualify for it, and then you're with some credit union that says they'll allow them, and you stop there, and you didn't realize that you had to also figure out your debt ratio, you could be in a pretty bad situation post decree, right? So yeah, that's what you're alluding to, and it sounds like you've heard a couple of those scenarios
Yes.
that come to
Mm,
life. Yeah,
right. And I'm just thinking, I think so many people assume, "Oh, well, my if I can do it and my attorney is drafting the decree, it's done." But you gotta make sure you're talking to your attorney about this because sometimes they don't even know.
right, right.
And then you're set with a divorce and you can't even follow through with what you've agreed upon because you
Yep,
can't get that is I don't mean to scare people. This isn't to scare. This is to just give you the information to know
yep,
what you need to look for.
yep,
Well, you need to call and you need to make sure when you call the person who I don't know all your fancy words, but the person who holds your mortgage, when you call them, sometimes the person you talk to on the phone says, "No, you can't do an assumption," and they don't know. So you have to make sure that you're talking to the assumptions department or something so that you get the right information on the front end. Then you can start digging in to see if you can actually afford the home. And Brett, like you were saying before, in some situations, renting is going to be more expensive.
oh, absolutely.
You know what I mean? Even if you have to refinance. And
Yeah.
so there it is just it's not something to take lightly. And I think the thing that's so hard is divorce is so hard. And it's hard to work from your brain in the right spots because you're under so much stress. So just take a breath, have that hope, and know like the more information that you get, the more comfortable it makes you. It really does about anything. So, just to alert people that if you have a home and you're not sure, dig in and then connect with Brett. I always send people to Brett and you'll be in the show notes. So, um, yeah, so I think that's so important. Are there any other things that you see in divorce for people, whether they are wanting to keep the home or sell the home? Any other big flags that are coming your way that I maybe am not aware of?
Well, I mean, the verbiage in the divorce decree is a big deal for the mortgage piece, or for even the name delete assumption. If they keep the house and do a name delete assumption, anybody who's dealing with the mortgage, you're going through an underwriting process, whether you're starting a new loan or whether you're doing a name delete assumption, trying to keep their loan, you're still going through an underwriting process. So somebody's looking at that divorce decree, and you better believe that underwriters are reading through that divorce decree. So having the right verbiage in there, which means having having talked to somebody about this and kind of have your ducks in a row before the divorce decree is finalized is the critical piece, right?
Yeah.
Because if like um sometimes you'll see a client that'll after divorce do a cash out refinance to take out the marital settlement. Well, that could have been structured as a buyout instead of a cash out, and cash out is a hit to the interest rate. So, and I think that's one of the big
Wow.
mistakes that most non-divorce mortgage specialists make is they just don't deal with this enough to know that can be structured as a buyout. And there's many times I find myself helping people structure it as a buyout before the divorce is finalized. That we went to the client and I kind of had this conversation that we went to the attorney and said, "This is how we want this to be written." Sometimes it's you pay the ex spouse more of a marital settlement to have them take more of the debt. So it doesn't really matter to them. It's still it's a net zero sum, right?
Yeah.
But it allows them to do it as a buyout, not a cash out, saving them potentially 3/4 of a percent on the interest rate, which is a lot these days.
Yeah. And
You know?
I'm so glad that I brought that up because that's another thing as I'm thinking back, as I've worked on these, and if I'm helping someone through their paperwork, I know I've talked to you and the lender and asked what wordage needs to be in here.
Yeah.
Not every attorney's doing that. So I feel like this is, I mean, I don't think they all are doing that. I don't
No.
think that they're realizing that they need to. So there's probably not a lot of attorneys listening to this podcast. So it's going to be up to you as the client to let your mediator or your attorney know that this is really important and that they need to get that wording right because you kind of got to become the expert in it. Just like in your health stuff, you have to kind of become the expert in yourself.
Yeah. And there's a lot of pro se people that don't even use
I
attorneys.
know.
And I always tell them they typically will use the Minnesota form, the form on the Minnesota State website for their divorce decree, and that it covers a lot of stuff, and it's fairly robust, but there's a lot of things that it doesn't do well. It doesn't convey property very well. It that we see post decree issues with that form, so I tend to tell people if you it's probably worth $1,000 or whatever it would be to have an attorney just draft your decree and put it in their template, right? They'll have a template, and that it's all
Yeah.
basically the same legal template that they are, but that's different and more robust than the Minnesota State form. And uh, it just it addresses a lot of things that the Minnesota State form doesn't. So that's one thing I would say to pro se people. Um,
And I've got to jump in, Brett, because I haven't talked about this forever, but I have a Minnesota divorce paperwork course. You can go in and I have videos and it makes me cringe to watch myself. I did it a while ago, but I teach as I go. Like I teach the legal information and they have the forms. And they have the forms that I would use. I think your name's in there too
oh,
when
okay.
they're looking at, so it's like if you can't afford me, even, there's and sometimes you can't. Sometimes you can't, and yet you want a little bit more than because a lot of people come to me because 'cause they're like, "I just can't even I don't know how to fill this out."
Yeah.
Well, it walks them through and gives information, and it still always says, you might just take this to an attorney to represent one of you on a limited scope if you're in Minnesota, and then just let them file it for you so that
Yeah.
you're getting everything taken care of. But that is another option for people. And I know it's different for everyone. And I'm kind of a do it yourselfer. I'm kind of I'll figure it out. And so I get why people do it, but there are
Yeah.
things you don't think of. There's so many things with the home, with like your estate plan, with your beneficiaries. There's just so much. It is nice to have some guidance.
Yeah.
So,
And
and we're
just,
both
I mean,
there.
it's funny
Right.
that one of the examples I give to how different each scenario is. Sometimes, you know, sometimes leaving both names on the loan is a mistake. Sometimes not leaving both names on the loan is a mistake.
Yeah.
Right there, it just depends. If somebody's got a kid that's graduating, I just had one yesterday that has a child graduating high school in 2 years, and it's kind of that. Well, we're gonna stay in this house for 2 more years, but then I'm gonna sell the house. And in that case, it makes sense to have two names left on the loan, but it depends on how much trust there is in that relationship, and that and between the spouses. And a high spite divorce is usually a better idea to take the name off, but
Right, and
it's
I would
almost.
yes. I would say, Brett, that most attorneys don't advise that, but I
Right.
have had people who have walked through the mediation process who have done that.
Yeah.
Because I'm like, "You can own the room together." And they're like, "We can?" Yeah, you can own a business together. You don't have
Yeah.
to be married to own things together, but it is a little tricky because you have to then talk about how is it gonna divide when it sells, and people, I'm assuming, Brett, usually just Like, so when that child graduates, they sell the home and split the proceeds, right?
Right.
Then there's all kinds of things of what if they don't agree? Like, we get into that when we're talking. What if
Yeah.
they don't agree on what the price to sell it is? And
You said something that I think is an important point to come back to real quick. You said the ownership, and there's a difference between the ownership of the property and who's on the loan. Who's on
okay,
the
talk
loan?
about that.
What's that?
Talk about that a little bit.
Yeah, yeah, yeah. It's probably, if not one of the most misunderstood or confusing, I think, parts of uncoupling the house is the fact that there's these two completely segregated things. Who owns the house, which is who's on the title or the deed,
Mhm.
and then who's responsible to repay the bank, who's on the loan. Those are totally different things. And in Minnesota, you can have either, right? So yeah, you can have one spouse on the loan and both spouses on title, both are ownership of it, but only one spouse signs up or is responsible to repay. So it's easy to change the title after a divorce. You just do a quick claim deed,
Yep.
QUIT, and that's a couple pages, and you file it with the county for $120 or whatever it is, and it's changed. You give 50% title rights from the other spouse to the other spouse. So now one spouse has 100% ownership of the property. That was easy.
Yep.
It's hard to take a name off the mortgage. Well, the loan, I should use the proper terminology. It is really a loan. We misuse the word mortgage, but I won't get into that because that's
Okay.
too deep for her. So, um, I use the word mortgage interchangeably, which,
Okay.
but so when two people are on a loan, it's harder to remove one name because then you have to go through a refinance process or a name delete assumption process. You have to go through underwriting to make sure that that one person remaining qualifies to make those monthly payments. So,
Yeah, I'm glad that you brought that up because I've never really sat down and thought about that. So, if your name is on the title alone, so say you're the mom and you're going to keep the home, and you're going to keep it for 2 more years because you got a kiddo that's graduating then, and so you during the divorce decree you do that quit claim deed and your name alone is on the title but you're both still on the loan.
mhm.
Well, how does that affect you as the owner of the home?
um, well, it's probably wiser to remove the ex's name. Um, but it doesn't, you're still the owner, and it just means that you're both responsible to repay the loan, but I'm
Mhm.
the only one that owns it. It's just two different things. Um, yeah.
And so I guess in the paperwork, we talk about who's gonna pay for taxes, who's gonna pay for repairs that come up. You do have to address all of those things,
Yeah, the
and
divorce
that's all in
decree,
the paperwork. What if there's
right.
nothing in the paperwork and you're on the title, but you're both on the loan? Then what?
What if there's not, say that
Like,
again?
what if someone I don't even know if this has ever happened, but say
Yeah,
you did a do it yourself divorce. You
yeah,
did it yourself.
yeah.
And then you did a quick claim deed and owns the home by herself, but you're both on the loan. And you never talked about who's going to take care of repairs and you're not agreeing to it. Is that on the owner? Or you know what I mean? Like if something happens that you have to like a furnace goes out or I don't know. Is
Well,
that
you're getting into legal questions that are beyond my scope because what
so
I'm
just
trying,
make sure you put it in the paperwork.
yeah. But see, that's the thing about divorce decrees. It's just, I don't know if I should even say this, but there's no teeth in a divorce decree. There's no, um, I mean, it says what people are going to do, what both spouses are going to do. And, but if whatever that is isn't done, you have to file a motion and bring it back to court and have the
I know.
judge say, well, that, this is what you had in the decree. You agreed to this. So I'm going to rule this way. The decree just gives, and this is me completely speaking out of turn because I'm not an attorney. If any attorneys are listening to this, but the decree, if you don't do something that the decree says, the police are not coming to your house.
But you do have, if at least you take the time to write up how it's like, you do need to just, that's why I think it's so important to have someone help you, think through, okay, now what about if you need to repair something? What about, you want to make sure you're thinking through all of that so that
Oh,
you get
yeah.
it,
I mean,
you know what I
yeah,
mean? You get it in the decree. And yet, but you can go to court. You do have that because it's in the decree. Where if there was nothing there, it's a little tougher.
yeah. If there's two, if the exiting spouse left their name on the loan, this is why it's better to just remove the name. This is one of the many reasons why. Um, not o- not only can a missed payment affect the person who left, whose name is still on the loan and still therefore responsible to repay. If the retaining spouse misses a monthly payment, the other spouse's credit is affected negatively. So
Right.
that's an easy one. That until the name's taken off, you're both still um, responsible to repay the loan, even if the divorce decree says
I
that
know.
that exiting person is indemnified and held harmless. But what happens, another reason why it's best to take the name off is because kind of what you're saying, people get hung up on that. And if it's kind of like, oh, I was really nice to you and I left my name on there so you could keep your 3.25 interest rate. So what happens, what I've seen in the last 4 years is that people, like the exiting spouse will use that against them in almost every conversation, right? Like they owe them kind of thing.
Mhm.
So, it just depends on the relationship, the trust level,
Yeah.
the um, the ability of the people to get along or not get along. But that is, I could absolutely see kind of what you're saying. I left my name on the loan. I know I'm not on the title of the house, but I left my name on the loan. So therefore, I have some kind of jurisdiction or say in what happens with the house because
Right.
I'm responsible to pay this debt, which is absolutely false. They don't. They don't have any jurisdiction, any say in it, but they think they do. And they can probably easily convince their ex spouse that they do because who's supposed to know that, you know?
Right. Right.
So it's just, it gets mucky and it doesn't.
So mucky. And this is what I want to say because our time is up. We actually went over a little, but I'm so
Okay.
thankful that you were willing to come in and talk. Um, I think I'm going to just draft up a little cheat sheet on this and I'll let you look at it, Brett, and I'm going to put it in the show notes
Okay.
so that people can have something handy because we went over a lot. And I don't want people to be fearful. So if we can just get something written down, and maybe you already have something
So
like
I have a few years ago, I drafted a handbook, it's a handbook for navigating high rates. So it goes through the different options that people have when they have a 3% rate and rates are in the sixes. What are their options? And it goes through quite a lot of that, and I'll send that to you and you can post it.
perfect. And I feel like you maybe have sent that to me before, but send it again. We'll get that in the show notes. So this is all crystal clear. And then if it's not, they can give you a call.
Yeah.
If they have
Okay.
question. All right. Brett, thank you
Great
so
stuff.
much for being here.
You're very welcome. Thanks
Take
for having
good
me.
care.
Yep. See you, Lisa.
See ya.